Something we can all agree on, even if it is something we all hate. Finally, hate has united us. Hi everyone, my name is Joe Bob, and this is Barely Paying Attention. Given that this episode is going up on April 15th, it seemed only fitting that we talk about one of the world's greatest tragedies: taxes. There's an idiom attributed to several different people throughout history, but most famously, Ben Franklin said, "In this world, nothing can be certain, except death and taxes." And apparently Keith Richards. Now, taxes is a super broad topic that will probably take a couple episodes to do justice. So today, I want to start our tax conversation by discussing some of the principles of taxation in the United States and how business tax incentives work. When we talk about those principles, we first have to start off with the prevailing American feeling towards paying taxes. We hate them. We hate taxes more than we hate... Actually, we don't have a joke here, because we couldn't think of anything that we hate more than taxes. Americans' hatred for taxes is the entire reason our country even exists. In 1773, colonial patriots boarded ships in the Boston Harbor and dumped 92,000 pounds of tea overboard. Why? Because of taxes. You'll remember this event as the Boston Tea Party, which is believed to be the catalyst that kicked off the American Revolution. No taxation without representation sparked the Revolutionary War, which enabled the United States to become its own country and then go on to be the global dominating superpower. In other words, it's safe to say that we really, really hate taxes.
It's the worst part of the game.
Oh, it's what?
Taxes.
The majority of the reason that taxation is such a hot button issue is due to the complexity of the tax code. How complex? The US tax code is more complicated than... We don't have a joke for this either, because nothing is more complicated than US tax code. The statutes of tax law put out by the US Congress has a total of 2,652 pages and totals over 1 million words. For reference, that's more than the entire Harry Potter series. But wait, the tax code isn't just statutes alone. IRS regulations and other clarifications add 4 million words, or 9,000 additional pages. If you read the tax statutes and regulations for 8 hours a day, it would take you 50 days to read it all. But the fun doesn't stop there. Also included are previously decided court cases in which tax code was disputed. The Commerce Clearinghouse publishes the Standard Federal Tax Reporter, which includes notations after each statute containing relevant court decisions regarding the tax code. Altogether, that report comes out to, drumroll, 70,000 pages. Now, for the sake of being fair, there are those who would argue that including the entirety of case law in the tax code is kind of like including the entire history of the Supreme Court decisions in the Constitution. Those people would argue that the tax code isn't 70,000 pages long. Instead, it's only 2,600 pages. To which I would respond and say, that's still 2,600 freaking pages! So why? Why is it so complicated? Wouldn't it just be simpler to tax everyone the same percentage? First off, yes. Yes, it would be. But we have to consider the hatred for paying taxes and what that actually does to the tax code. One of the key components is the government's desire to use taxes to incentivize or disincentivize behavior. If the government wants more of something, they tax it less. When they want less of something, they tax it more. This incentivizes and disincentivizes consumer purchasing behavior. One of the best examples of this is smoking. In the late 80s, early 90s, several state governments increased taxes on tobacco products in an effort to disincentivize smoking. Now, throughout our history, we've all generally agreed on what the government should incentivize. Most notably, the government incentivizes business and business growth and production. For good reason. Using the tax code, the government wants to help private sector businesses create
jobs, jobs, jobs.
One of the things you're likely to hear in the media and from certain politicians is that all of these rich business people haven't paid a dime in taxes, or how they avoid taxes. And given that this tends to be one of the bigger themes regarding the tax policy debate, I want to broadly explain what's happening when business people are accused of not paying taxes. Like we mentioned earlier, the government tries to use taxes as an incentive or as a disincentive. One of the things the government wants to incentivize and promote is economic prosperity. We achieve and maintain economic prosperity when businesses innovate and thrive, and tax incentives can help businesses do just that. And guess what? This is not a partisan issue. It's not just one side that thinks incentivizing businesses with tax code is a good idea.
I want to offer new incentives for manufacturers, not to ship jobs overseas, but to bring them back here to America.
Let's use Antonio as an example. Antonio owns a pizza place called Antonio's. It's a poppin' happening little place that does pretty well. Last year, Antonio's brought in $600,000 in revenue. By anyone's standards, that's a great year. And because it was such a great year, Antonio catapulted himself into the highest federal tax bracket. On the year, Antonio will pay about 40% of his earnings to the federal government in taxes, not including state taxes that can be as high as an additional 15%. All in all, about half of Antonio's earnings might be paid in taxes in some form or another. But remember, Antonio isn't working at the pizza place by himself. He has to pay his employees. He also has to pay rent for the building he's in, utilities to keep the lights on. He also has to pay for the decor, advertising, supplies, permit fees, and of course, the ingredients to make the pizza. No pineapple. All of a sudden, half of his money is going to taxes, and then he has to cover his expenses. Antonio's really not having a great year at that point. He might even go into debt or have to close his restaurant. The government recognizes that Antonio's business benefits the local economy and the community as a whole. So instead of having Antonio get taxed based on his $600,000 revenue, cutting a $300,000 check to the IRS right off the top, the government incentivizes his business by allowing him to only pay taxes on his profit. If he brings in $600,000 a year, but $500,000 went to paying employees, rent, renovations, and all of his other expenses, Antonio will only have to pay taxes based on his $100,000 profit. Instead of paying $300,000 in taxes, which would make his business unworkable and take money out of the local economy, he'll pay around $30,000 in income tax based on his profit. The federal government knows that businesses spending money in their community in the form of payroll, contractor work, and other expenses is greatly beneficial to the community. By only making businesses pay taxes on the profit, the government is incentivizing growth and expansion, something we can all agree is a good thing. This same principle applies to all businesses, from Antonio's to Amazon. Business expenses are not taxable income. So to get back to our main point of answering, why is the tax code so massive and complicated? Arguably, the biggest reason is because the government and the IRS need to explicitly lay out what is an expense and what isn't. Some expenses are obvious, like payroll, utilities, rent, while others are questionable at best. One could make the argument and say, well, I need pants to work, therefore pants are a necessary expense that should reduce my taxable income. Yeah, I don't think you're going to win that one, buddy. But even then, it still takes 70,000 pages to explain? Yeah, because all sorts of questions regarding all sorts of scenarios must be answered. If I go to a business meeting over dinner, can I expense my meal? If my wife comes to the meeting, can I expense her meal? If not, well, what if she's my business partner? How about if our marriage makes her the legal part owner of my company? Can I expense it then? What if I own the restaurant? What about the car I used to get to the meeting? Is that an expense? What about the gas in the car that I used to get to the meeting? What if, while I'm in the meeting, someone siphons gas out of my car that I used to get to the meeting? Is that a business loss or personal property damage? You can see where I'm going with this. Because the government uses taxes to incentivize business innovation and economic growth, the tax code is necessarily complicated to ensure that all bases are covered to the best of their ability. Even though some people might push the limits a little bit. Yo, check out this sweet blender that's totally a tax write-off now because I used it in the video. Now, the point of explaining business expenses is to help you understand that when politicians say things like, Amazon didn't pay taxes for 14 years, that's because Amazon didn't turn a profit in those 14 years. Instead, they took the money that they made or raised and invested in their company, which in turn was an investment in the communities they were doing business in. They provided jobs to not only company employees, but contractors, developers, and engineers who helped build their infrastructure. Not to mention the thousands of other businesses where Amazon employees and contractors would go to spend their money. I guarantee you that economic growth due to business involvement in the community is far better for that community than artificial growth from government subsidies. Now, obviously, major companies have the ability and money to pay teams of accountants to pore through the tax code and take advantage of every expense imaginable. But can you blame them for doing so? Especially when the politicians most vocally complaining about it are the same ones who wrote the laws in the first place and have the ability to change them. It's kind of like you choosing to go to Taco Bell and then complaining about having diarrhea. Business owners inject vital resources into our communities, and small business owners are what drive the American economy. They do so in part by utilizing the tax code in totally legal ways to grow their business. It's not fair to vilify them for it. If you want to talk about various proportional tax increases, fine. It's a legitimate conversation and you can respectfully bring your arguments to the table. But remember, the next time you hear politicians barking about how evil business people avoid paying taxes, keep in mind that those business people aren't being accused of a crime. And demonizing businesses and business owners for legally applying the tax code just isn't going to get us anywhere. That's our show. For those of you barely paying attention, thanks for doing so. We'll see you next time.